All right, what's going on, everybody? Welcome to the trading recap for Alpaca Trading. Uh, Today is February 22nd, 2019, and I'm just going to go over the plays that we alerted today, show you the entries, exits, where you could have made money, and just do a little bit of an analysis on the way that the stocks moved. I just want to start out by saying that everybody that is a trader has their own system, trades differently, and looks at things, even though in a similar way, they assume a different approach to their trading tactics. So just because I'm saying something or just because I'm using an indicator does not mean that I am right. It just means that this is what works for me. So same thing goes for, the way that Kayla or Mike do their own thing. It may be different for mine and vice versa, but it does not mean that one is better than the other or that one is right and one is wrong. So we want you guys to find your own trading style so that you can figure out what works for you. And that's really what this is all about. So I'm going to show you what works for me and how I do it. And then, you can grab what you like and what you don't like. But once again, just because I'm doing something a certain way does not mean that you have to basically copy it the exact same way, because usually when you follow what other people are doing to a T, it's not necessarily the correct way. So you just gotta kind of find your own rhythm. All right, so I don't have that much time today, unfortunately. So I am just gonna get into it right away. Once again, my indicators right here. I have the 6 and the 12 exponential moving average. So I am in the 3-minute chart right now for Tesla. I'm gonna go into the 1 minute. So basically, what the EMAs show is the last 12 minutes is the 12 and the last 6 minutes is the 6. So it's basically the average of the price for the last 12 or 6 minutes. If we go back to the daily, it's going to show you the last average for the 6 or 12 days. Same thing with the EMA and the SMA. The orange line that I have right here is a 200, and the yellow one is a 50. Again, they act as general areas of support and resistance as well. So here is Tesla. Kayla called this out at 6:36 a.m. So I'm just going to zoom in real quick. Right around here. She called 293.62, and so she's at her support level here at 293.62, and I'll explain to you why. Because some people like to use draw their support and resistance lines based on previous price history or previous history, right? So if you notice here, this area around here, so I'm assuming, this was yesterday. It hit an area of resistance here at around 293.62, and that is what Kayla went by, and that's what a lot of people do, because this is what's being traded in the actual normal market hours. But it's important to sometimes also understand that a lot of things happen during pre-market. So if I go into and select my, let me see, equities, and show pre-market, I have a different support line, which is right here because of this entire kind of area of consolidation right here. And so I would have set my support at 293.02. And based on the 293.02, as you guys can see over here, the Tesla today, even though it traded sideways, and I would most likely not have recommended anybody trading Tesla today, I think it respected the 293.02 better. But again, this is a great example to show how two lines of support can still work, but can be placed in different areas. And because lines of support and resistance they're not exact. They are a range. Okay, so just because someone says 293.02 or 293, 293.62 does not mean that it's going to happen exactly there, because there's market makers and there's just millions of people trading the stock or thousands of people trading the stock, and it's a range. Okay, so what does that mean? It means that a range will give you either a tighter profit possibility or a wider profit possibility. So in this case, if you would have followed Kayla's 293.62, you would have seen that in 1, 2, 3, and 4 areas right here, you would have been able to take profit, but it would have been a quick scalp. Whereas if you would have used the 293.02, you would have been more conservative, so to speak, with the range, and you would have had to wait until around, say, 2:32 p.m. to start taking that profit, right? Whereas if you would have done with Kayla's, you could have taken profit here, 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 and here, and here, right? But again, the tighter you move that support line, the more you have to scalp in a way, as opposed to putting it at a more of a key support level, which in my opinion is 293.02. And once, as you can see, it bounced off that 293.02 here 1, 2, 3, 4 times, 5 times, and then now it's kind of like retesting it. Okay, so again, I don't think Tesla is a play that I would have considered today, just because, as you can see, it's trading across a channel and it's kind of like all over the place. So I'm just going to leave you with that for this, because in my opinion, you could have basically, bought at the support, sold at resistance, bought at support, sold at resistance, and so on and so on and so on. But with options, this is something that is a little bit more advanced, requires a little bit more patience, and your mental game needs to be like very, very strong for you to be able to trade a chart like this, especially on the minute chart. So I'm just going to move on to Netflix, which was the next play. This is what Mike called out. He put Netflix put below 360.35, which is right here. And again, if you look at the pre-market data, that also shows that during pre-market, Netflix had that 360.35 resistance, and that is where Mike kind of put his line. And then if you go back to the previous day, if you draw the line over 360.35, you see this area right here, which is also a resistance. So again, when you draw support and resistance lines, you want to be able to connect as many points as possible in the past, because all the other traders are going to see this and they're going to respect that, right? So again, because this was a resistance, once at the opening of the bell, or when the market opened, it broke above that. Well, this area of resistance became what? The area of support, right? So this is now the new support. So Mike was pretty confident about that, and so am I, because of all the times it tried to hit it and it didn't. So now, if Netflix breaks below 360.35, it's a pretty strong support because of that strong resistance. So this is when you would take an entry. Again, it did not happen today. I'm not sure if it will. The market has not closed yet, but I am going to talk about how you could have made money today off of this put, which is kind of like an area of support. So notice how basically Netflix, as soon as the market opened, it started giving this huge kind of like wave up on the 1 minute chart. It stayed above the 12, above the 6 in some areas, and then suddenly it came back down here, right? Well, again, if a stock moves up, it has to come down. So it has to consolidate for a while. If I show you here what Netflix did, is it created sort of like a nice pattern here. And eventually, once it broke through it, it started kind of trading sideways. But as it did that, it stayed above the 50, and it stayed consistently above the 6. Again, when a stock is trading sideways, right, like in this area right here, I would not touch it. Like this entire area right here, I would most likely not have touched if I wanted to go into a call. Now, where do I enter? Well, notice how as we start getting towards 10:35 in the morning, again Eastern, the stock starts kind of bouncing off the 50, right? Now, this right here, okay, is where I would have entered. And I'll explain to you why. Notice how in this area right here, even the stock is mostly trending above the 6 EMA, right? Here, the difference is that the stock is riding a wave. Okay, so if you look at this at the 6 EMA and the 12 EMA, notice how it kind of rises almost at about a 45-degree angle. This is what we want to see when we enter a position. We want this EMA to kind of rise at about a 45-degree angle, just like here. Okay, so as you can see, the stock just started going up, riding that wave. Okay, and then you could have entered maybe around here, second, third candle, and notice how it beautifully just respected that 6 EMA all the time. You see this red candle right here? I'm just going to zoom in. Because this is a good example. You see this candle right here? This is where most people would have sold. And it's true. A lot of people sold here, right? Why do we have this red candle here? Does it mean that the stock is going to reverse? No, it's just all of these people that rode the wave here. What did they do? They took profit. That's all they did. They took profit and they exited. That's why we have this red candle right here. But then the price action was strong enough that it kept moving the stock up to a high of 366.13. So if you would have entered around here and gone all the way up to that high, right? Or let's say over here, you would have gained $3.19 on Netflix, which is huge. It's huge. Okay, so now let's go back and look at what happened with Netflix, right? Netflix now sunk below the EMAs, which means sell, okay, and then it bounced off this exact area where people sold before, okay, and then it bounced back up, respected the resistance here around 366.13, and then it came back down. Now, what would have been a good play here? Well, if you notice, what Netflix created here is what we call a double top. Okay, a double top is a bearish pattern. It's a bearish chart pattern. Okay, so you have one top here, another top here, and this area right here is what's called the neckline. Okay, or just kind of like the middle point. And what usually happens is this area right here is the new support. If it breaks through that support, the theory is that it's going to fall about the same distance that it went from here down to here. So notice how if we split this in half, right? This area right here compared to this area right here is almost the same. It's the same distance. It's about 50-50. So most of the time, once it breaks this line, this is where I would have entered for a put. And I would have just ridden that, that 6 EMA all the way down until it reversed. And you could have made, let's see, about $1.21 with Netflix, right? So again, understanding chart patterns and understanding how they work will also help you in understanding where to enter and when to exit. Then again, the Netflix started trading sideways, but notice how it respected most of the time that 50 SMA. Did it break above it? Yes, a few times. Did it break above it? Yes. But the point is, if you don't want to be, let's say, tricked by the market makers, right? Understand that everybody respects the SMA lines. Everybody does. But the market makers are going to assume that that if it goes a candle or two above the SMA, right, everyone's going to exit, right? Even though the stock's on a downtrend. So this is kind of like a fake out here, a fake out here, another fake out here, right? So what you would do is you would set your stop loss or your mental stop loss just a little bit above the 50 SMA, right? Just a little bit above. And notice that, yes, it is above your entry point, but you have to give the stock some room to move in the opposite direction. It is perfectly normal for you to see a negative amount in your contract. You just have to decide how much that's going to be. Is it 10%, 15%, 20%, 30%? Well, if you would have basically started here, right? Enter the position right here, and you would have held it all the way to like what it's doing right now, you would have made so far $3.20, right? So what we see here with the SMA, right, is that it's testing the SMA. It's testing it. It's testing it. It's testing it. But notice that the big picture is that since this point right here, right, the stock retested that support, but then every single time it went back up and retested it, what did the stock do? It created a lower high, lower high, lower high, right? So the point here is that on the big picture, the stock is on a clear downtrend. So you have to be patient if you want to maximize your profit. And as you can see here, over the course of the day, Netflix just dropped. People got faked out here, 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 probably here, a little bit here. But the point is, look at the trend. It tested the 50 SMA, nope, came back down. It tested the 50 SMA, nope, came back down. So what do you think is going to happen, most likely, based on trend, next time it tests the 50 SMA? If the last 2 times, 1, 2, 3 times, it has tested it and it has come back down, do you think there's a pretty big chance that on the 4th and on the 5th time it's going to try to do the same thing and it's going to fail? Yes, because you have to follow the pattern, okay? You have to follow the pattern. And also notice that the 200 SMA, so the 50 crossed under the 200, and then even though it came a little bit above the 50, it still bounced off the 200. It bounced off the 200 here, it bounced off the 200 there, and then again, it stayed below the 50. So this is something that most people don't really look at when they are trying to be patient, okay, with their trades. And something that I want to point out that's very, very important. I want you to realize how everything that I have been telling you has been based on nothing but price action. I have talked zero about indicators right now. I have said nothing about the MACD. I've said nothing about the RSI. Volume, yes, it's important, but everything that I just told you, I could have traded just by looking at this chart without the need for the indicators. So it's important for you to understand that the indicators do not tell you what to do. The price action on the chart does. You use the indicators to confirm what the price action is doing. All right, let's go to V. V was looking at a call. Mike did this at 7:54 a.m. Looking at a V call over high of day 146. Okay, so right here is 146. Here's the resistance here. It bounced off there. There's another resistance there. And basically 1, 2, and then finally it came over 146. Now, notice how this would have had to be a pretty quick play because you would have had to enter at around 11:15 and exited at around 11:29. So this was a 15-minute play. Okay. Now, of course, everybody that went in here, why did the stock come down? Because all the people that bought here took their profit. Okay. Does not mean the stock is immediately gonna come crashing down. It just means that people were taking profit. Then it came back up, and then of course, eventually it came back down, retested the 146, was not able to hold it, came back below the 50, below the 200, and eventually it came back down. It came back up to 146.21, which is kind of like the same area right here. So you could have done two plays here, right? The moment it confirmed over 146, you could have exited somewhere around here when this bearish engulfing came down and broke through the EMAs. And then just like I said, when you have the 6 to 12 to 50 to 200 all kind of in a war zone here, you don't touch the stock. Okay? And then eventually, look at this beautiful 45-degree wave that just came just up, 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 stayed consistently above the 6 and the 12, and it just was on a just complete uptrend. So this was about from 145 all the way till 211, so almost half an hour of nothing but green candles. So this is where you ask yourself, when do I enter? Do I wait for 146 or do I enter down here? Well, I would have entered down here. Why? Because look at this consolidation right here. 1, 2, 3, 4, 5, 6, 7, 8 candles, all rejected, right? All rejected that 50-day moving average. The moment the stock starts coming down, you see that kind of wave now, that you just ride the wave, that 45-degree angle. You could have started right around here. You would have watched for the 200 as an area of resistance, which it broke, and then ridden it all the way up to 146.23, which would have given you about 43 cents of gain, which if you would have bought one contract, it would have given you about $40. If you would have bought 5 contracts, it would have given you about $200 approximately. Okay, so that is the play right here. Again, this is something that you would have had to enter quickly and just have been really patient with it. And of course, again, when you exit, well, somewhere around here with the EMA crossover. Okay, so let's go to the next one, PayPal. PayPal didn't really do anything today with our call. So Mike said, Kayla said PayPal call if it can hold above 96. It did not. But again, you cannot, and if you really notice here, I mean, the stock is trading between $95 and $96. Do you really want to enter a play like this when it's just, yeah, you could have entered here, exited here, but again, this PayPal is trading sideways today, so I would not have touched the stock. It's just too risky. Okay, so now I know that some people had some questions. So Mike, would it be possible to post another trade recap in regards to a hedge that worked out? I find those really helpful to learn from. Thanks if you can. So we talked about hedging a little bit with, with Netflix. So hedging, for those of you that don't know hedging or what that means, it just means that you are entering a call and a put at the same time, or whenever, let's say, a stock is on a temporary uptrend, you have, like, let's say, a put, you would want to enter a call until the stock reverses again. So again, it's kind of like taking advantage of a temporary uptrend that's going to happen in a stock while you are in a put. and then exiting that call when that temporary uptrend reverses and goes back to that long-term downtrend that was happening before. So I'm just trying to kind of figure out here an example that I could have given you for that. I think today the if we look at V, you know, I can't quite find a good one, but I will definitely have to. I mean, I guess Netflix would have been, you know, a very good example of how you could have, I guess, hedged right around this area right here for calls, and then eventually, like I said before, here and maybe here, understanding that once it broke this area of support, bounced off this area of support, it was going to come back down. So if you thought, like, if everybody, let's say, sold here and said, okay, I'm going to buy a put here because now the stock is going to reverse, but then it did this, you could have held your put right here, made money on calls right here, made money on calls right here, and then eventually the put that you bought around here would have made you money if you would have held it down here. Okay. Another question, quick question: for the break of RSI trend strategy, do you recommend only the 5-minute or longer time frames because 1 minute can be too choppy? Okay, so let's talk about that. What that means is that there is a way that you can basically use the RSI. It doesn't work every single time, to basically figure out when the stock is going to reverse, right? So it doesn't always work. I usually go and use the 3-minute or maybe the 5-minute chart. Let me see if I can find something better here. Okay, so the idea is for you to find 3 points in the RSI. So, and you know, ideally on a high, so like when it's up here, and then find 3 points and then connect those 3 points. So I'm going to do it right there. Okay, so what this means is, as long as the stock stays below the red line on a downtrend, right? As long as it stays below the red line, the stock is going to continue to go down, right? Sometimes, or maybe on this one, my mistake. I'd have probably done something like this. Like I said, it doesn't always work out, but the idea is for you to find 3 points. Actually, I'm just going to do it right there. Okay, so you have 1 point there, another point there, another point there, right? So what's happening is, if the stock does not cross over this red line, you are good for a put. Okay, so as you can see, if you would have entered, let's say, a put here when Netflix hit its high of day, and you would have held it all the way to around here, right? You would have made money, because you would have, let's say, entered around the high of day, and then right around there you would have sold. That was $3, right? So yeah, the stock was choppy and went all over the place. Sometimes it did that double top, but it stayed below the RSI. It stayed below that line that we connected with the RSI. So you can also do the same thing on larger time frames. But in this case, because it hit its high here and we're on the 5-minute chart, this is how that would have worked. I don't think this is a good example, because even though Netflix continued on a downtrend, as you can see, it broke over the RSI right here. So again, this does not always work. I can try this on Tesla and see if I can find a better example. Again, it traded sideways, so that's not going to work. Let's look at Visa. Let me see, 3-minute. Trying to connect 3 points right there. So if you would have basically entered Visa at right around here, right? At 146.15 or 146.17, and you would have respected the RSI line here. Let me just draw this better. Okay, and you would have wanted to know when to basically enter into a call. What you do is you basically wait for the RSI to cross over this third point right here, and then once it crosses over the point, the stock starts on an uptrend. Now, yeah, I would not do this on a 1 minute because it's too choppy. 3 or 5 minute at least. And then again, understand that it's not always going to work, but again, it's a way to interpret what's going on here in a much clearer way over here. Okay, so that's it for today. Those were all of our plays. I hope this made sense. Like I said before, the market is trading sideways until the trade deal is announced. So there may not be as many opportunities as we will have once the market either reverses or goes on another rally. So please be careful with your positions. Don't put too much money into it, and just be careful, be safe, and understand that everything is in the chart. Okay, everything is in the price action. You start first here, and then you go down here, and you confirm it with the indicators. All right, guys. Sorry that I was so rushed. But again, I actually on my way to work, so I gotta go. But thank you guys, and I will see you guys next time.